It's probably time for you to look at your tax liability for this year. Let's talk about it. What's up, print fam? My name is Darren. Welcome back to the print shop. Now, around the fourth quarter of every year, I like to look at my current year's predicted tax liability. Now, it's a little bit hard. I have to use metrics from last year as well as what's going on this year to kind of gauge what it's going to be, because fourth quarter is typically my best quarter because there's Christmas and New Year's and gift giving and lots of holidays. And a lot of other companies also like to spend their budget for the year. It's a great way to spend it with me to reduce their tax liability. So let's get into some of the details and talk about why you should look into what your taxable liability might be this year. Now, I'm going to preface this video with the fact that I am not an accountant. I have talked with my accountant who's licensed in all 50 states, and he is doing an offer of a 3-year review of your taxes, as well as a consult with you if you're interested in that. So his information will be down in the description. He will talk to you, review your taxes for the last few years to see if there's something that maybe could be modified or changed in the future to help you. Kind of what I like to do at the end of the year, fourth quarter specifically, is look at where I am. How much money did I make? How much money did I lose? What did I spend? What equipment do I have? And the reason I like to do that is because then I can know, am I going to pay taxes or am I potentially going to get a tax return? And if I'm going to be paying taxes, I want to do what I can to reduce that liability. And the only way to reduce that liability is to, in essence, spend money before the end of the year. You have to do it before the year ends or it does you no good for this year. I talked to my accountant. We usually review, did I buy any major equipment? What are the write-off amounts? Because like for the Summa and the Canon and stuff, you can depreciate them immediately when you buy them, or you can depreciate them over 5 years. And he has that all figured out and spreadsheeted, and he knows where they're all at. And so we determine, okay, how much do we already have this year as write-offs? What does that entail? Did I have any more children? Which I didn't. But we go over all those metrics and those data points to determine where the business is at financially. And we also determine, okay, if I don't have a taxable liability, how much more money can I make until I hit that threshold, and what that threshold is versus how much I'd have to spend to get there. The reason I like to do that is because if I can do something to make it so that I don't have to give the government money, I can use that money to grow my business, which is the intention. You're not trying to scam the system. That's how the system is designed. I would rather spend that money to grow and better my business than to just give money to the government. So is that, do I buy, like, can the company use a vehicle? That's why a lot of times you see like contractors that are always buying these nice new trucks every year or every couple of years because they need that deduction or want that deduction, so they're not just paying cash. Is there equipment that I can buy to make the business better? Is there maybe some inventory I can buy now that I'm going to be using shortly? And inventory can be a tricky thing because inventory can be taxed. Talk to your accountant to determine what that is, what that period is. You don't want to buy like years and years worth of inventory, or like if you're running a roll-to-roll printer, the adhesive goes bad, the vinyl goes bad, so you don't want to pre-buy a bunch of stuff. But like with lasers, I can buy tumblers that I'm going to sell in January, February, March, but I can buy them now. As long as I'm cycling through that inventory, it doesn't count towards that. Again, I always like to do this typically October, November, to see where I'm at, to know, okay, if I make X amount of dollars, or if I need to spend money. Typically at the point, and with my DNS problems, I'm fine. I don't have to spend more money, but it's something that I advise you look at, because I have talked to a lot of business owners that fret every year because they pay taxes, and it could be that maybe you're doing something wrong, maybe you're not writing things off properly. For me, I've just found it easier. When I started my business, I made that list of here's all the things that I do, and the number one thing on that list that I hated, that I didn't want to do, that I wanted to get off my plate, was the accounting. So my accountant not only does my books every month, they do my accounting at the end of the year. I review it, I get monthly statements saying here's where things are, here's what's happening. If they have questions, they ask me. If I do something, like I had to pull cash out to pay someone, so I had them sign a physical receipt. I sent it to him so that they could monitor it, track it, do everything that they need to. But it's just relieved the pressure of me. Before, I was paying someone to do the bookkeeping every month. At the end of the year, I was spending thousands and thousands of dollars to have my books fixed because I did it wrong. I didn't enter the information right, or it wasn't reconciled properly, or pennies or dollars were missing because I just didn't know what I was doing. I am not an accountant or a bookkeeper. I try to be a printer. So I highly suggest it. Again, if you are looking for an accountant or want a second opinion, my accountant has offered to do that 3-year review for free, as well as just give you a consult. If you have anything particular that you do for your business, I'd love to know it. There's a lot of tax like loopholes. You have things like the Augusta rule. If you have kids, you can pay them. There's stipulations to that, like you have to pay them into their bank account. When they spend the money, it has to be used for them. There's a lot of things you can do to reduce that taxable liability. As an example, when I do pay my kids, I pay their account, I pay them, they use that to buy their clothes and shoes and stuff that they need for school. There's all these thresholds and things you can do to reduce your taxable income and reduce your taxable liability. It also comes down to, are you an LLC? Are you a sole proprietor? Are you an LLC filing as an S Corp? Are you a C Corp? There's lots of things, lots of confusion. But all of this to summarize and say, look at your books before the end of the year to find out if there's something you can do to help alleviate some of your tax burden before the year is over. If you have questions, comments, suggestions, leave those down below. As always, Print Fam, thanks for watching. We'll see you in the next one.